Hi everyone, Connor from Zenfinex here, back with more of the educational videos that we provide to you. Today I'm going to be giving you a guide on how to trade breakouts in the markets. I'm going to run through the general theory of breakouts, but more importantly, I'm going to demonstrate this to you on a live chart scenario. Therefore, at the end of the video, you'll easily be able to spot a breakout, and also you should know how you can be profitable trading them. Enjoy. So, it is important to understand the theory behind breakouts before we go diving in onto the charts. So really take the time to listen to this part of the video and even jot down some notes from the PowerPoint if that's what helps you out. Now, the background around it, you can use breakout trading in forex, stocks, commodities and even cryptocurrency trading. It's been used on all four of those for many years. And one of the main advantages is that it can be on any time frame, whether it's on the 1 minute time frame or the weekly time frame. Generally speaking, the higher the time frame, the more reliable trading is and the less likely you are to be stopped out by random price spikes. And it is another method of technical analysis which we're giving to you here at Zenfinex. Now, what defines a breakout? Well, a breakout is when price breaks out to trade and close above a resistance level or below a support level. The first thing you want to do really is draw your support and resistance lines. And when you're marking your support and resistance lines, it is important first that you identify at least two areas where price reacted from. In other words, two areas of resistance and two areas of support. Then you can draw your line joining them up. The more you have, the more areas you have, the more reliable the support or resistance. And I'm going to show an example of this later. It's important to note as well that the lines can be horizontal or angle, depending on whether it's in a ranging market or a trending market. So now you can draw your line. Once you've joined your areas to draw your support and resistance line, you now have your trading range. Now we can wait for price to break out in either direction. The reason we want to draw both support and resistance lines is so you have the ability to trade both ways. However, if you feel a certain way about a market, you can just draw either support or resistance. For example, if you are bullish in the market, i.e. you think the price is going to go up, you can just draw a resistance line and wait for a breakout above, as you won't not be interested in selling the market really. Patience is now the key, and I'm going to go through some entry and exit strategies for you now. Okay, so that's all the theory out of the way. Let's take a look at how you would actually enter and exit a trade in a breakout scenario. Now, to enter the trade, you have three options. Option number one is where you trade as soon as the price exceeds the range. Now, here we have the chart in front of me. Ignore the fact that it's the gold market. This is just a great example of what you might see in the live market. You can see that our range is roughly this is what you would have marked out, hopefully, your range to be. Now, the reason for this is we have our resistance levels in place. We also have our support levels in place. Potentially here as well if I extended the line. Now, this is our range that we have at the moment. Option number one is where you take a trade as soon as price exceeds the range. So as soon as the price went below or above, we would have entered either a buy or a sell. Below, we would have entered the sell. Above, we would have entered a buy. Now, this is by far the riskiest way to do it. And the reason is because the candle has not actually closed yet. And so there is no actual confirmation of the breakout. Option number two is where you set a pending order above or below the range. So you could set a pending order up at around 1380 or for a buy, or a selling pending order down at around 1280, for example. Now, it should be at least at a high or low that hasn't been achieved before, but where you put the order does depend on your strategy. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. The problem that both these options have is that you can be caught by fake outs, and I'll show you exactly what I mean. Fake outs are where the market threatens to break out of the range, but actually the candle closes back inside and can cause quite a lot of drawdown. Now I'll show you exactly what I mean in this example, where the market's running through. And you can see that we actually, according to our strategy, we actually started pricing below this range. Now, on option number 1, that means we'd have entered a selling trade right away at this level as soon as price exceeded, and we might have put maybe our stop loss around here, looking at a take profit of around 1270. Now look what happens actually in the market. So we're tagged into our trade, and you can see now we're actually snapping back into the range, and suddenly we've actually hit our stop loss already, and I think the market may have even gone a little bit further. So quite a lot of drawdown and quite a lot of risk just for that tiny bit of pricing that went below the range. Now, by far the most, or the safest option is option number 3. Now this is where you wait for the candle to actually close to confirm the breakout. Now let's have a look at what happens. So we're waiting for the candle to actually close below this range, and I'll show you the benefit of doing this. There we have it. So this candle's now closed. We're now below the range. We're now looking at selling opportunities. Where you put your actual entry level, you can put it, which is this support line, which now is turned as a resistance line. So we might decide we want to set a sell with our stop loss maybe at the high, which is there, which is quite a safe one, depending on your strategy. What I have to say really is it does depend on your circumstances, but there are some general tips to follow on your stop loss and take profits if you feel like you're stuck. Your take profit can either be at a previous high or low, so our stop loss potentially here, and maybe I'll take profit down at this low you can see in the bottom corner now. Or you can set a sensible risk reward strategy, which is what I do. So for example, you might want something that is 1 to 3 risk reward. So you might want to move your stop loss and take profit, so you've got a nice risk reward ratio of 3 to 1, which basically means for every 1% that you risk, you could gain 3%. Let's take a look at this example. So we're waiting for the market to tag this resistance line, which was previously a support line. Move it on a little bit quicker. So you can now see that we've been tagged into the trade, and we can run it through now to see where price actually ended up. You can see the minimal drawdown we had, and that's just by being a little bit patient on the market and waiting for that option number 3 entry. And as you can see, price run through and hit our take profit level, just for us being a little bit more patient, and the drawdown was quite minimum as well. So this is by far really the best way to trade breakouts. We really want to wait for that confirmation candle that actually closes below or above what your range is at the time. What I'd suggest is potentially opening a demo trading account with us at Zenfinex, completely free, paper trading. There's a link in our description where it will take you to our website, and once you open the demo account, one of our team members will be in touch to help you out if you have any questions. And then what I'd suggest is that you just go through on the live chart and you try and find examples of this, and there are loads throughout there, and just try that option number 3 or whatever option you prefer, but just option number 3 would be the safest option, where you wait for the confirmation candle and see what you find. If you do get stuck, please drop any comments in on the comments section and we'll be happy to help. Other than that, guys, please like and subscribe to this channel, where we're going to be posting some more educational content out there for you. I hope you all learned the theory of breakouts and how to trade them on a live chart as well. Thank you all for listening, and I'll catch you all for the next educational video.